Well, if there's selling coming in there and there's selling coming in here, what's above it? Paycheck. So when I look at the book and I can see it's all bids, I want to try and take advantage of that paycheck liquidity to get short into those bids. So I'm going to sell that paycheck to get short, to run the price to the target at the bottom edge. And there's the bottom edge. So I use that paycheck to get short. And the takeaway from that short trade, I use a paycheck to get short, and I use the liquidity at the bottom edge to then close out my positions, if that's what I'm trying to achieve, is a close out position. I can use the liquidity at the bottom edge to book my money, or what have you, if it's a possible accumulation. The idea would be to try and drag the buyers in before it hits there, then sweep the buyers out. But you can't always get it to happen. That's the point about paycheck. You can't be the guy that forces it. You'll just recognize it when it does happen. So it is a good concept. It's just one of those concepts about trying to reclaim the narrative in terms of where the liquidity is resting. And when we see paycheck, we can start using it to our advantage. So the sales, for example, on the S&P have all had an element of paycheck attached to them, yes? They've all had an element of paycheck. So you can see that there was, for example, a seller here. You can see there's some sellers came in there on the S&P. And then you can see that as the price came up to that same level, some sellers came in here. And then there was some sellers that came in here. Do you see that? So we had lots of sellers here. Well, every time we see a seller, what happens to the stops? It's the same price. So that stop gets bigger. And by the time we reach this guy here, that's not a small stop. That there is actually quite a sizable stop. And therefore, that's where I get paycheck liquidity. So when I get into that paycheck there, when I see that big buyer in that location, as I hope it is, I'm going to then take my opportunity to get that bigger sell into the position there, take advantage of that sell, and obviously I'll be making the paycheck because there's expected to be a good volume there. It doesn't always happen. You're on a stop and no volume comes out, in which case the sellers aren't stupid enough to get sucked into that as a trade, but there's always some. There's always some. There might be some algorithms and what have you. You can see we've just reached target, guys. So congratulations on anybody that's been with me on this journey. There you go, guys. Another massive winning trade. 89s, just traded 71s, not quite $1,000. Not that far away from it, but I wouldn't be closing this just yet. The value still looks relatively good for a possible press on this one. You can see there was another bit of paycheck in here. You can see selling came in here. Some selling came in on the way down. Another seller came in, and then obviously they got trapped, and we took advantage of that little trap. Paycheck liquidity at the bottom edge is used for profit taking. If you want to take profits, you can see there was paycheck in here. We didn't want to take profits because the value was collapsing, so we didn't want to take profits. So it's just the idea of a stop. It's just the idea of an accumulation shape or pattern. It's the idea that paycheck is always going to be something that we use to get liquidity. The idea of a spring is a paycheck. The idea of an accumulation bottom edge is a paycheck. Because that's what the commercials look for. They'll look for that liquidity to generate the paycheck narrative. And if we tie that in with book depth, things magically happen in terms of trades, don't they? So if you look at the chart just now, there is no paycheck anywhere, is there? There's no paycheck at the top here on the pullback. There's no paycheck at the bottom at the pullback into the bottom edges. There is no paycheck on this chart just now, so there's nothing that we have to concern ourselves with. Great trade, by the way. I think Melvin was on board. Is that it? Is that it? Just the one on board on that sell-off, guys. 89s to 70s. Nearly $1,000 on the short trade. Absolute perfection, right? There is another big reason that you might have had for that target price. Does anybody know what it is? Phil, you'll know what it is. Why else would we take that trade? Why else would we take some profits at that price? Remember, I'm not taking all my profits because I thought the market was very bearish. Unfortunately, the market's just broken south to give us the full $1,000 there. So I am delighted to announce that I've just joined the 1,000 club on that short trade. The value has spiked back up on the cash open here, so I am aware of the fact that it has spiked on the cash open and we might be getting the bounce. But the other reason why we took profits at that price was because it was the half-back trade from the previous bracket. So there was the low bracket there, there's the high bracket there, there's the half-back trade. Who didn't know that price? Who didn't know that area? Who didn't have that level in their charts? Who's not making their bed properly? Who needs to go out and do more drills? Who needs to go and hit the square? Who needs to do another circus? Who is not passed inspection? Half-back trade area, guys. Who didn't know about it? Who's not passed inspection? On a drill square, guys. Everybody out. Here we go again. So it was a measured move and it was a half-back trade. Measured move and a half-back trade. Yeah? I see everybody's rolling their eyes. So nobody passed inspection, guys. It's bad, isn't it? It's bad.